Hi everyone, this is Erwin here. This is Stock Hacker Academy channel, and here we have Joel.
What's up, folks?
Joel, what are we talking about today?
Unilever PLC, a global multi-mega brand.
And I actually don't even think most people know the name of the company. They might
Mm-mm.
know Vaseline,
Hmm.
Axe body spray, like the body spray, deodorant, Hellman's mayonnaise. I don't know this laundry company, laundry brand, seventh generation laundry. I
Yeah,
never used that.
they're like sustainable organic laundry brand.
Oh,
I use
cool.
their laundry detergent and soaps a lot.
Oh, okay. Ben and Jerry's ice cream. I think most people are familiar with that one. I love the Old Spice commercials.
Yeah.
Dove soap, which I have in my house. I actually, as because I'm a Costco customer, I have a lot of Unilever products in my home. So this is a
Mm.
company that I use. I believe in their products. I like the fact that they're carried in my favorite retailer, one of my favorite retailers, Costco. Yeah. What else can you tell us about Unilever?
I think what we're already seeing is a part of their business strategy. Um, you say you have Dove, and because you're a part of Costco, you're already in there. So they have this distribution network that is extremely effective. Um, they're Unilever as a company is essentially just the umbrella for all these other brands, but they specialize in sticky brands, brands that people go back to consistently. So for like myself, I have Old Spice hair stuff, hair wax. I have Old Spice shampoo, Old Spice deodorant. Like it's
They
just
have
like
hair
I've tried.
wax. I
Yeah,
need
the
that.
so it's something that like whatever they do appeals to me as an individual, and I haven't found a reason to go to anybody else now. And all of the brands that they buy and nurture have those kind of qualities. So, uh, and there's over 400 brands, first of all, like under Unilever, and they're in over 190 countries throughout the world. So truly global. And um, so this is a company that isn't going anywhere quickly, right?
Which I like. I could use some boring in my life.
Yeah. Yes. And funny enough, like Unilever, as much as they would be considered, and we'll get into this a little bit more later, they could be considered a consumer staple. They actually have been beat up a little bit lately. So this is kind of why we're paying attention now.
Yeah, I've been following the stock. One of my mentors follows the stock and invests. Uh, I've been following it as well. The stock's come down quite a bit, like Joel said. Joel, actually, can you share
Um,
your screen? Let's show the
Pulling it.
chart. Show some
Yeah.
live information. Uh, so, folks, what we're looking at is a historical. This chart goes back about 5 years.
Hmm. So this is, yeah, so 2017. Here's the pandemic right here. This is the pandemic low. And you can see that it's already below the pandemic low. Um, so that some people might be scared by that, and it's something to pay attention to for sure. Now, we see that it has precedence at, what's this, like 36, 38. Um, but I think the really interesting thing is if we look at, so they're a part of consumer staples. So let's take a look at what that industry is doing over the same time frame. So there's the pandemic low, and just like everything else, it's getting hit, but it's still done fairly well. Like that 5-year trend is fantastic. So the overall sector is doing great. And one of the biggest companies in that sector is kind of getting pulverized right now. It makes you wonder how long can that last? If the
Right.
sector is doing well, so that means there's a lot of consumer attention or at least investor attention on it. Eventually, the theory is this single company within that sector will start to um, mirror the performance of the rest of the sector.
Right. And as value investors, we like stuff that's on the cheap.
Hmm.
So when the stock fell from the 50s to into the mid 40s, I was paying more attention. I was already paying attention because the stock pays a dividend, as you can see in the bottom right corner, right? I picked it up. I picked it up for just under $46. And again, it was near the pandemic. It's below the pandemic low. So for my own analysis, I've been trying. I've been kind of, sometimes I just ignore what happened since the
Mhm.
pandemic started, and I compare it to where its price was before the pandemic, and and at the trough of the pandemic crash, and to help me determine if the value's there. This is a UK company. It pays a dividend. I use their products. I forgot there was. Oh, I also use Sensodyne toothpaste,
Mm.
which is a Unilever product. So, and again, with the way the world's going, inflation's at historic highs, 40-year highs. So people are shopping in places where they can save money. When I go to Costco, it looks like Christmas, and in terms of the number of cars in the parking lot and people inside the building shopping. So I know that the product that I'm investing in as a shareholder, that's in the store where I think people are going to look to save money. So even though the stock is down today, I'm not too worried. I put in my first tranche, meaning I only put it in about a third of the amount I plan on investing for my total holdings for this company. So I'm just gonna go wait. I'll probably wait. I may be waiting a few months. I'm gonna be waiting for until we're past the bottom on the stock, what I think is about the bottom, and I'll be adding more shares and collecting more dividends.
And I think every company right now, unless you're an oil company, is going to see it's going to look bad, for the most part. Um, so if there is a company that you feel like is unfairly and this is exactly the position that we're taking, if there's a company that you feel is unfairly being beaten up or sold off, there's more value in it than what investors are giving it credit for. Um, this is where we start to pay attention, even start, like you said, even start your buying in. So some of the overall, um, pardon me, ratios and financials for Unilever, just to get a look at. So we took a look at its business model. Oh, another thing I want to point out is Unilever is focusing on emerging markets, particularly India. It's growing its presence in India, which, from an investment perspective, that's opening up a huge population, opening up its exposure to a huge population. So you like to see that. You like to see um, a new market being exposed to your products. It's just as long as it's done right, it's a recipe for growth.
Right. Specifically, like India. I think you mentioned India, and I think folks know it's the number two most populated
Hmm.
country in the world, just behind China. They have over a billion population. And also, I should have mentioned, Joel and I actually weren't even positive which sector of the S&P 500 this company was, because some of the brands, a brand like Ben and Jerry's is a bit more luxury,
Hmm.
right? It's not they're not perfect for the economy the way it is, because we're seeing from Walmart and Target and their earnings that consumers are changing their consumption habits. They are looking for more private label. Of course, Unilever is not private label; they're a brand, so it's not perfect. Uh, but that's okay. I'll be looking to pick up some Costco because I have lots of Kirkland product in my home as well.
Yeah. From a financial
Nothing's
perspective,
perfect.
no. And I think this, like, as much as like we look at this and we say this is all just a thesis, and I think that's the one thing that a good caveat for all of this. This is all just a thesis. Um, this is our reasoning for watching and paying attention to this stock. So um, one of the big things here is the net income. It's been the 5-year growth trend is pretty interesting. 2018 had like almost doubled its net income, and then it dropped back down to something that was a little bit more in line with its trend, and it's still going up. So obviously you like to see that. Um, Total assets. What I like to go to is cash and cash equivalents. So as of 2021, they're sitting on 3.8 billion. Now that's down significantly from 2020, but you got to imagine that they were probably spending some cash on any kind of emergency maneuvers they had to make during the pandemic, if they had to make any. So that total short-term cash and short-term investments, 5 billion. And then I want to see, okay, so short-term debt, 8 billion, and long-term debt, 25 billion. So usually, I get excited about companies that have enough cash to cover their debts. That's not the case for Unilever. Now, does that worry me for Unilever? I mean, when you're a global brand, not as much. But their total equity is 22.46 billion. So my next thought is, okay, well, what's their debt to equity ratio? All right, well, debt to equity, 1.5. So that's like bank level. Like if you look at the debt to equity level ratios for the banks, it's right there with the banks. Usually about 1.2 to 2.1%, or 2.1 is the big six Canadian banks. So although they don't hold as much cash as I might think I like to see, this tells me that they're managing their debt just fine. Those are the big things that I look at.
Yeah, just
when
check
I'm
quickly. Bank of America, for example, is closer to 2-to-1 debt to equity.
Yeah. So they're not doing, this isn't horrible. In fact, it's very good. So
Awesome. Anything else we should talk about with Unilever, Joel?
I think one of the points that your mentor made was the fact that right now we just saw that it's at about $42. It's cheaper than Pepsi. It's cheaper than some of its competitors. It's got a 4% dividend right now. It's higher than most of its competitors. It's positioned in its sector for growth, and we know that their business plans are for growth. With the growth and focusing their growth in India. So it's there are many points to this thesis. Now, you have to make that decision for yourself. This is not a recommendation.
This is not advice, folks.
No, this is
we're
our
just sharing
thought
what we're
process.
doing.
Yeah. If you don't like how much debt they have to service, or if you don't like the fact that their price has been beat up, just wait, just watch it. If you like how expansive they are, but you're not sure about the future of it, especially with like inflation costs and stuff like that, because now usually these consumer companies will pass on inflation to customers, but it's not an immediate thing. So if you're worried about how that's going to affect them, then wait and watch. So that would be some of my own personal notes.
Awesome. Amazing. Thank you, Joel. And
Yeah.
for anyone interested, please like and subscribe. We're going to keep coming back with more videos to provide insight into what we're doing, what we're looking at. We love to research. We love to geek out on this sort of stuff, and we love to share it.
One of the reasons why we're looking at this is because we are trying to be defensive. And so one of the big questions is there a market crash coming in 2022? Obviously, we can't answer that, but we know that the market has already dropped close to 20% since the beginning of the year. So technically, it's close to market crash territory by technical definition. We actually produced a guide called What to Do If the Market Crashes in 2022. So if that's something you would like to read and check out, there'll be a link in the description below, and you can sign up for that and check it out.
Amazing. Thank you, Joel.
Thank you, Erwin.
Thanks, everyone.